Hi students, this is Balakrishnan. Welcome back to BALAS Accountancy Special Classes. This is my 42nd episode. Before we start, I'd just like to ask if you wouldn't mind to subscribe to my channel. It would make a big difference to me and I'll be very appreciative if you can do it. And of course, if any of you out there who want to have one-to-one lesson for a very strong basic knowledge in financial accounts, I repeat, for a very strong basic knowledge in financial accounts, please contact me. My 41 years of work experience in account sector as well as teaching experience for more than 2 decades should help you out a lot. My contact details are given in the description box below. My classes as of now is meant for students of CA Foundation course as well as for Cbse or ISC. Thank you. Well, today it's a special class and the class is meant for equipping students for the ensuing Cbse accountancy examination scheduled for the March end. I'm taking up the Cbse board. I repeat, Cbse board sample question paper for the year 2022-23. At the outset, kindly Google this sample question paper as well as the key answers. I repeat, as well as the key answers. Both you will find in the Google. Download and keep the same ready at your end. However, I will be providing you with a typed version of each and every question as and when I will be dealing it. My task in this video and one or two that may be followed will be to give comprehensive explanation of each answer. In this particular video, I am taking up part A of the subject accountancy, consisting of accounting for partnership firms and companies. I repeat, accounting for partnership firms and companies, compulsory for all the candidates. You will find that the question number 1 to 17 are of objective types of questions pertaining to the above mentioned chapters. In this episode number BSc 042, the correct answer, as has been given in the answer key, I will be explaining and convincing you. I do hope in your final preparation for your ensuing exam, this episode and a few more to follow will immensely help you. So, as usual, let me switch gear to my sharing section of this video, sharing of files and explanation thereon. Thank you. Well, students, first question. Navya and Radhe were partners, PSR 3:1. Shreya was admitted for 1/5 share. Shreya was unable to bring her share of goodwill premium in cash. The journal entry recorded for goodwill premium is given below. Shreya's current account debtor 24,000, to Navya's capital account 8,000, to Radhe's capital account 16,000. Being entry for goodwill treatment passed. Well, we know that in the event of newcomer unable to bring his or her share of goodwill, her current account will be debited and the old partner's capital account will be credited with sacrificing ratio. Okay? Here, the sacrificing ratio is 8,000 and 16,000. That is nothing but 1:2. So, 1/5 of the total share has been sacrificed by the old partners in the ratio of 1:2 to give to the new partner. Shares by Shreya from Navya is 1/3 of 1/5. That is 1/15. Similarly, Radhe, it is 2/3 of 1/5. That is nothing but 2/15. And all ratio, of course, 3:1 they have given us. Is it not? Yes. So all ratio 3:1. Hence, Navya's new share is 3/4 minus whatever share she has given to the newcomer. That is 1/15 we have just calculated. And LCM happens to be 45 minus 4 upon 60, that is nothing but 41 upon 60. And similarly, Radhe's it will be 7 upon 60. And newcomer Shreya, 1/5, nothing but 12 upon 60. Hence, the ratio is 41:7:12. That has been given as answer A. So, that's all. Next question. Question number 2. Assertion has been given as commission provided to partner is shown in profit and loss account. And a reason thereon, commission provided to partner is charge against profits and is to be provided at fixed rates. 4 different answers they are given. And answer C, both A and R are incorrect. That I need to explain. The very explanation is that commission, bonus, and salary all are shown under P&L appropriation account. Okay, so that being the case, A and R are incorrect. Okay, commission provided to partner is shown in P&L account. No, it's shown under P&L appropriation account. And reason is that against profit, it's not charge against profit. It's an appropriation, hence shown under P&L appropriation account. So both A and R are incorrect. Okay, now next question. Question number 3. A share of ₹10 each issued at ₹4 premium, out of which ₹7, including ₹1 premium, was called up and paid up. The uncalled capital will be 4 different answers, and ₹4 per share is the correct answer. My explanation being 7 minus 1 premium, this is the middle point, ₹6 is the called up value. Hence, uncalled is face value 10 minus 6, 4. Okay, answer B. This minus 1 premium, there only students are likely to make mistakes if you are not thorough. That you take care of. So let's take the answer. It is answer B. That's all. Thank you. Question number 3. This is the optional question under question number 3. Well, it is like this. While issuing dash type of debentures, company doesn't give any undertaking for the repayment of money borrowed by issuing such debentures. The middle words I have highlighted. Okay. There are 4 different answers have been given, and the answer D, non-refundable debentures, is the correct answer. My explanation being 0 coupon rate debentures. Okay, this is slightly misspelled, ignore it. Massive discount while purchasing, but no interest. However, redeemable at face value. Okay, so it's redeemable. That means repayment is ensured. Okay, so that is not the answer. Non-convertible debentures cannot be converted into equity shares in future. However, redeemable is ensured. So that too is not the answer because repayment is ensured. Secured debentures. That means debentures have been originally issued by hypothecation. I mean, under hypothecation of certain assets of the company. However, redeemable. Okay, here also repayment is ensured. Non-redeemable debentures. Okay, the very words itself says that repayment is not ensured. Repayment is not ensured. Hence, answer D. That is what they ask. Company doesn't give any undertaking for the repayment of money borrowed by issuing such debentures. Okay. So for non-redeemable debentures, the condition is taken care of. Hence, answer D is the correct answer. Now, next question. Question number 4. Samaksha, Arshia, and Divya were partners, PSR 5:3:2. With effect from 1st April 2022, they agreed to share future profits and losses in the ratio of 2:5:3. Their balance sheet showed a debit balance of ₹40,000 in the profit and loss account and a balance of ₹40,000 in the investment fluctuation fund. The market value of an investment is ₹30,000 against the book value of ₹50,000. Partners have decided not to show revised value in the balance sheet and to pass an adjusting entry for it. Which of the following is the correct treatment of the above? Well, here, as usual, 4 different answers they are given. Answer A is the correct one. Well, students, let us re-examine the question. So different items we have to list down, and the net effect is to be taken into account because they do not want to show the revised value in the balance sheet. Hence, debit balance of P&L account 50,000. Investment fluctuation fund, I am showing 20,000. Reason is, of course, they have a balance of 40,000, but one of the investments value depleted from 50,000 to 30,000. So that 20,000 effect we have to adjust here. So 40,000 minus 20,000. That particular investment having a book value of 50,000, market value being 30,000, there is a loss in respect of it, 20,000. That is adjusted against your fund. So fund has come down to 20,000, 40,000 minus 20,000. Okay. So total of it, a debit of 50,000 and a credit of 20,000, a net debit of 30,000. We know this is a case of capital adjustment only because they do not want to show the revised value of the assets. Hence, capital adjustment is to be done. How to do the capital adjustment? Raise in the old ratio and write off in the new ratio. So 30,000 in the old ratio, this is the amount, and new ratio, this is the amount. Net being Samiksha 9,000 debit, Arshia 6,000 credit, Divya 3,000 credit. So this journal entry, Samiksha debtor 9,000 to Arshia 6,000 to Divya 3,000. Okay, so correct answer is A. Okay, capital adjustment is done. That is done how? Raise in the old ratio and write off in the new ratio. So we have taken the total value, we raised it in the old ratio and written off in the new ratio. Net effect is this much. For that, a suitable journal entry has been passed. So next question. Next question, the alternative question of question number 4. Sohan and Mohan are partners, PSR 2:3 with capitals of rupees 5 lakhs and rupees 6 lakhs respectively. On 1st Jan 2022, Sohan and Mohan granted loans of rupees 20,000 and rupees 10,000 respectively to the firm. Determine the amount of loss to be borne by each partner for the year ended 31st March 2022 if the loss before interest for the year end amounted to rupees 2,500. As usual, 4 different answers, and answer D is the correct one, which I am supposed to explain, and my explanation is like this. Well, students, we know that a total 30,000 loans have been given on 1st January, 20,000 plus 10,000. So 30,000. 1st January to 31st March means 3 months, 3 upon 12 months. And this 6 by 100 is in fact what they're checking. Whether you are aware, in the absence of specific agreement between the partners, the rate of interest applicable to the loan given by the partner will be 6%. Okay. So that's 6% you should clearly remember and apply here. So it works out to be 450, or in other words, 6% of 30,000 is 1,800 and 1/4 of the same is 450, right? And distributable loss. Already there is a loss of 2,500 and this interest on loan is yet another expenditure. So the distributable loss will be 2,950, and if it is distributed in the ratio of PSR, that is nothing but 2:3. It will be 1180 and 1770. So answer D is correct. 1180 and 1770. Okay. So next question. Question number 5. Vihan and Man are partners, PSR 3:2. The firm maintains fluctuating capital accounts and the balance of the same as on 31st March 2022 is rupees 4 lakh and rupees 4,65,000 for Vihan and Man respectively. Drawings during the year were rupees 65,000 each. As per the partnership deed, interest on capital at rate of 10% per annum on opening capital has been allowed to them. Calculate the opening capital of Vihan. Given that the divisible profits during the year 2021-22 was rupees 2,25,000. Target is to calculate the opening capital of Vihan. And the answer happens to be rupees 3 lakhs D. And I'm supposed to explain. My explanation is this one. We have been given the closing capital of Vihan 4 lakhs. Okay, that we are taken as the base. And whichever item deducted, we will add back and vice versa. So drawing 65,000 has been already deducted. So that is added back. I get 4,65,000. And share of profit, 2,25,000. He has got a share. Upon that, 2,25,000 into 3 by 5. So that is 1,35,000 I deducted. At this moment, 3,30,000. This is nothing but capital after credit of interest on capital. Here you have to think, you have done several sums, no? Profit after charging commission at a certain rate. Same case here. Okay. At the rate of 10% interest on capital. They are told, na, 10% per annum. So at the rate of 10% per annum interest on capital, they are allowed. So after charging, or in fact not charging, after giving such interest, his capital is 3,30,000. So let us base on that 3,30,000 and rate upon 110, it will be 30,000. So opening capital is 3 lakhs. The correct answer is D, 3 lakhs. Okay, little more explanation. We can check back it. Let us based on this one correct answer of 3 lakhs. Drawings, we are reduced 2,35,000 now. And share of profit, that 1,35,000 we added. And interest on capital also similarly we added. We have got the closing capital of 4 lakhs. So perfect answer. Thank you. Question number 6. Savitri Limited issued 50,000 8% debentures of ₹100 each at a certain rate of premium and to be redeemed at 10% premium. So issued at a premium, and at the time of issuing, there is no loss. It is not issued at a discount. Issued at a profit only, at a premium only. Well, at the time of writing of loss on issue of debentures, statement of profit and loss was debited with ₹2 lakhs. At what rate of premium these debentures were issued? 4 different answers as usual, and answer C, 6% is the correct. And my explanation is like this. Well, premium to be given on redemption of debentures is a capital loss and is written off either from securities premium account or debited to the statement of profit and loss. Okay. Here, total loss on issue of debentures is equal to 5 lakhs. How? 50 lakhs into 10 upon 100, because at the rate of 10%, they need to redeem it. We are being told, right? So 5 lakhs and 50 lakhs, of course, you will agree with me. 50,000 debentures of ₹100 each means face value will be 50 lakhs. So 5 lakhs is the total loss. It's not basically issued at a discount. So total loss on issue of debentures is the redemption loss, that is 5 lakhs. So total loss minus security premium adjusted is the statement of profit and loss debit, because first they will make a recourse to adjust the securities premium. Thereafter only profit and loss will be debited. So we can reframe this formula. Securities premium adjusted is equivalent to total loss minus statement of P&L debit. And these figures have been given to us. We have just found out 5 lakhs at the securities premium adjusted. So 5 lakhs minus 2 lakhs. 2 lakhs has been given to us, na? They are clearly given 2 lakhs. Statement of P&L debited with ₹2 lakhs, right? So 5 lakhs minus 2 lakhs, 3 lakhs is the securities premium adjusted. Or in other words, they had got a gain of 3 lakhs on account of these debentures issued at a premium. Now the rate we have to find out. 3 lakhs upon 50 lakhs into 100, because face value is 50 lakhs. That happens to be 6%. Answer C, 6%. Okay? That's all. Thank you. Question number 6. Optional question of question number 6. Durg Limited issued 80,000 10% debentures of rupees 100 each at a certain rate of discount and were to be redeemed at 20% premium. Existing balance of securities before issuing of these debentures was rupees 25 lakhs. And after writing off loss on issue of debentures, the balance in the security premium was rupees 5 lakhs. At what rate of discount these debentures were issued? As usual, 4 answers. And the B, 5% is the correct answer. My explanation is that basically this is a case of double loss. Discount on issue of debentures as well as premium on redemption of debentures. Okay. Now, total utilization of security premium. We know security premium will be the first one to be utilized. Well, they had 25 lakhs beginning and it happens to be 5 lakhs at the end. That means 20 lakhs has been utilized towards this purpose. Total utilization. Okay, right. Now, premium required on redemption is how much? 16 lakhs. How do we know that? We know 80 lakhs is the face value. 80,000 debentures of rupees 100 each. 20% means 16 lakhs. Balance utilization of security premium is towards writing off discount. That's how much? 20 lakhs minus 16 lakhs, 4 lakhs. So 4 lakh has been the discount out of 80 lakhs face value. And the rate is 5%. Okay? And that's the answer. Now, next question. Next question, question number 7. Attire Limited issued a prospectus inviting application for 12,000 shares of rupees 10 each, payable rupees 3 on application, rupees 5 on allotment, and balance on call. Public had applied for certain number of shares and application money was received. Which of the following application money, if received, restricts the company to proceed with allotment of shares as per Cbse guidelines? The answer is C, rupees 30,000. And my explanation is as follows. As per Cbse, a company offering public shares must receive at least 90% of minimum subscription to proceed with the allotment of shares. Okay. So, or in other words, 90% is the minimum subscription. Okay. So 90% of the shares issued is 10,800. Total number of shares is 12,000 and 90% is 10,800. Hence, minimum application money expected is 10,800 into rupees 3. 3 is the application money per share. So 32,400. However, in case of C, rupees 30,000 is less than that. Hence, company is not allowed, or in other words, company is restricted to proceed with. Okay. Hence, and our answer is C. Okay. Now, next question. Question number 8. Amey, Binoy, and Chandar are partners in a firm with capital balances of rupees 50,000, 70,000, and 80,000 respectively on 31st March 2022. Amey desires to retire from the firm on 31st March 2022. With the help of the information provided, calculate the amount to be paid to Amey on his retirement. There existed a general reserve of rupees 7,500 in the balance sheet on that date. The goodwill of the firm was valued rupees 30,000 and gain on revaluation was rupees 24,000. Well, students, it's a very simple sum. All what it should strike you very fast that they're equal partners in the absence of mentioning APS or otherwise. So then things are very easy, right? His capital is 50,000. Okay, that we have taken, and 1/3 of all other things. General reserve is how much? 7,500. Naturally, 2,500. Next item. Goodwill, 30,000. So 10,000. And other item. Gain on revaluation, 24,000. So 8,000. Together it comes 70,500. Answer D. Very simple. Okay. Because this is for Cbse final revision. So I expect you have done all this retirement chapter, everything basically. So all these elements should be thorough to you. In the event of a partner getting retired, what are the Elements to be considered for settling his accounts are well known to you. I presume it. Okay, so it's a very simple sum. Thank you. Next question number 8, optional question. A, B, and C partners. A's capital 3 lakhs, B's capital 1 lakh. And as far as C is concerned, C has not invested any amount as capital, but he alone manages the whole business. C wants rupees 30,000 per annum as salary. So the deed is silent. So they are very specific how the deed is silent. Firm earned a profit of rupees 1,50,000. How much will each partner receive as an appropriation of profits? 4 different answers as usual, and answer D is correct, and my explanation is simple. In the absence of partnership deed, it is specifically given that nobody is eligible for salary, no interest on capital, no one should be charged on interest on drawings, and of course 6% will be the rate applicable to the amount advanced to his loan. Okay, so here his demand for salary is not acceptable. Okay, so the available 1,50,000 profit will be just equally divided. So 50,000 each. So answer D is the correct answer. Okay, this point, please make it very thorough. Rules applicable in the absence of partnership deal, right? So next question. Well, next question number 9 and 10 are based on one hypothetical situations. Okay, the question is like this. Read the following hypothetical situation. Answer question number 9 and 10. Puneet and Raju are partners in a clay toys making firm. Their capitals were rupees 5 lakh and rupees 10 lakhs respectively. The firm allowed Puneet to get a commission of 10% on a net profit before charging any commission, and Raju to get a commission of 10% on the net profit after charging all commission. Following is the profit and loss appropriation account for the year ended 31st March 2022. Yes, this is the hypothetical situation wherein we have been just given Puneet's commission only. Okay, and the first question number 9. Raju's commission will be 4 different answers, and rupees 36,000 is the correct answer. And my explanation is Puneet's commission 10 by 100, 44,000 has been given here. So if you take the reciprocal of that one, that will be the entire profit, total profit. Okay. Now, profit before charging Raju's commission will be 4,40,000 minus the above Puneet's commission 3,96,000, because this is an expenditure, right? Hence, Raju's commission will be 3,96,000 into 10 upon 110, that is 36,000. Why upon 110? It is after charging. So after charging means rate upon 100 plus rate. It happens to be 36,000. We can check it also. 3,96,000 was there, minus this expenditure of 36,000, 3,60,000. On the 10%, he gets a commission. So answer C is the correct one. Now, next question. Puneet's share of profit. 4 different answers as usual, and answer A is correct. And my explanation is this one. Divisible profit we have arrived at as 4,40,000 minus 2 successive expenditures by way of commission. It comes 3,60,000. Or in other ways, 4,40,000 minus 44,000 minus 36,000 is 3,60,000. And his share will be just half, because nothing mentioned otherwise means it will be presumed they are equal partners. So 1,80,000 is the answer A. Now next question. Question number 11. Choose the correct sequence of the following transactions in context. 1. Guarantee by firm to partners, guarantee by partners to firm, transfer of profits to profits and losses appropriation account, guarantee by partner to partner. 4 different answers have been given, and answer C is the correct answer, which I'm supposed to explain. Well, at the outset, it should strike you that this is from the chapter Fundamentals of Partnership, P&L appropriation account. Okay. we all know that in this order only it is done. First, we bring down the profit. That's what called transfer profits to profits and loss appropriation account. Thereafter, guarantee by partners to firm. Remember like this. Firm dictates the terms first. So, guarantee by partners to firm. Collect the money from them first. Then, vice versa. Guarantee by firm to partners. Last, between the partners. Guarantee by partner to partner. That is in the question 3:2:1:4. Okay. And the correct sequence is answer C. Right. 3:2:1:4 they have to show. And that has been shown here 3:2:1:4. So that's the answer. Next question. Question number 12. If 10,000 shares of rupees 10 each were forfeited for non-payment of final call money of rupees 3 per share, and only 7,000 shares were reissued at rupees 11 per share as fully paid up, then what's the amount of maximum possible discount that company can allow at the time of reissue of the remaining 3,000 shares? 4 different answers, and the answer B, rupees 21,000 is the correct answer. Well, at the outset, it should strike you that the 7,000 already reissued is on premium. So no discount has been suffered. Okay, that you should keep it in mind. And the remaining explanation is that the amount received on forfeiture is rupees 7 per share. You will see that. Okay. So non-payment 3 means 7 has been received. Right. And discount allowed on reissue per share is limited to this amount received on forfeiture only. That means hence for 3,000 shares, 3,000 into 7, 21,000. Right? That is the maximum possible discount the company can allow. That is in answer B. Okay? That's all. Now, next question. Question number 13. As per Companies Act 2013, securities premium balance can be utilized for which of the following purpose? A. Issuing bonus to existing shareholders to convert partly paid up into fully paid up bonus shares. B. Providing for premium payable on redemption of debentures. C. Writing off all capitalized expenditures. D. Buyback of debentures. This answer B is the correct one. However, let me add. According to section 52 of the Companies Act, security premium can be used for the following purposes. A. For the issue of fully paid bonus share capital. This is not one among the answers given. Next, for meeting the preliminary expenses incurred by the company. That too is not there. C. For meeting the expenses, commission or discount incurred concerning securities incurred previously issued by the company. That too is not there. D, I am holding on. E. For funding a scheme or buyback of securities which is conducted in compliance with provisions of Section 68 of the Companies Act. That too is not there. However, D says that for ensuring the availability of the premium on redeemable debentures or preference share capital of the company. This debentures is there. For ensuring the availability of premium on redeemable debentures has been given as an answer B. Providing for premium payable on redemption of debentures. Hence, answer B is the correct one. Now, next question. Question number 14. Ganga and Jamuna are partners, PSR 2:1. They admit Saraswati for 1/5 share in future profits on the date of admission. So this is from admission chapter. Okay. On the date of admission, Ganga's capital was rupees 1,02,000 and Jamuna's capital was rupees 73,000. Saraswati brings rupees 25,000 as her share of goodwill and she agrees to contribute proportionate capital of the new firm. How much capital will be brought by Saraswati? As usual, A to D for different answers, and answer C, rupees 50,000 is the correct answer, and my explanation being current capital of the old partners before the capital introduction by the new partner. Ganga 1,02,000, Jamuna 70,000, and the goodwill, whatever premium will be brought in, to be shared by these people. So total capital of the old partners is 2 lakhs. Let us check this figures. 1,02,000, 73,000, and 25,000. Okay, so 2 lakhs is the total capital of the old partners, including the goodwill, to be shared. So that represents 4/5 of the entire capital. Why? The newcomer is coming for 1/5. Left out will be 4/5. So 4/5 is 2 lakhs, means the reciprocal of that one. That means 5/4 will be the entire capital. On that 1/5 for the newcomer. That happens to be 50,000. Answer C. Answer C says 50,000. Okay. Now next question. Question number 15. Green and orange are partners. Green draws a fixed amount at the beginning of every month. Interest on drawings is charged at 8% per annum. At the end of the year, interest on Green's drawings amounts to rupees 2,600. Mind, interest, rupees 2,600, that also at the end of the year. Monthly drawings of Green were A to D, 4 different answers, and answer D, rupees 5,000 is the correct answer. Well, my explanation is like this. This sum is basically, we have been given the annual total interest on drawings, and we have been asked to find out what is the monthly drawings. Okay, so it will be like this. Annual interest on drawing is rupees 2,600. Categorically they are given. Or in other words, rupees 2,600 is the annual drawings amount. Let it be an X amount into rate into an average of 6.5 months. That means 8 upon 100 into 6.5 upon 12. Why it is 6.5? I'm sure by this time you are pretty sure about all this. A constant amount is withdrawn every month. Beginning of the month means it will be an average 6.5 months. Mid of the month means average will be 6, and end of the month it will be average of 5.5. Okay. Now we can transpose it like this. Annual drawings is equivalent to rupees 2,600 into 100 upon 8 into 12 upon 6.5. We work out all this, you'll get 60,000. Okay. Actually, monthly drawings will be divided by 12, rupees 5,000, answer D. Okay, rupees 5,000, answer D. Now, next question. Optional question of question number 15. Girdhar, a partner, withdrew rupees 5,000 in the beginning of each quarter, and interest on drawings was calculated as rupees 1,500 at the end of each accounting year, 31st March 2022. What is the rate of interest on the drawings chart? 4 different answers as usual, A to D, and item D, 12% per annum is the correct answer. And my explanation is that first you should understand this basic formula. Average period in cases such as beginning of the month or mid of the month or end of the month or beginning of each quarter or mid of each quarter or end of each quarter, average period will be time left after first drawings plus time left after last drawings divided by 2. Okay. So here it will be when drawings of equal amount are made in the beginning of each quarter, 12 months plus 3 months upon 2. How 12 months come? First day of the year, left out period will be 12. Last quarter of the year and left out period will be, because beginning of the quarter. So 3 months. Is it not? Last quarter, beginning until the year end will be 3 months. So 12 plus 3, 15. 15 divided by 2, 7.5 months is the average period applicable. Now our job will be very easy. Annual drawings is how much? 4 quarter means 5,000 every quarter means 20,000. Okay, 20,000 into 7.5 upon 12. We have just calculated 7.5 months average, no? Into rate of interest. That is 1,500. Or in other words, This will work out to be 12,500. Okay, 12,500 into rate of interest is equal to 1,500. Actually, rate of interest will be 1,500 upon 12,500. That is nothing but 0.12 or 12%. Answer D is correct one. Okay, answer D. Now, next question. The last question of this video. Question number 16. At the time of dissolution of a firm, creditors are rupees 70,000, firm's capital is rupees 1,20,000, cash balance rupees 10,000, other assets realized rupees 1,50,000, gain or loss in the realization account will be how much? 4 different answers as usual, A to D. And item D, rupees 30,000 loss is the correct answer. And well, prepare a dissolution account, whatever is required for this sum. That is nothing but capital account or cash account. We all know that the story of dissolution account comes to an end when the balance in the cash account or bank account, as the case may be, is transferred to the capital account. The capital account as well as the cash account must tally. That means we have done a proper job. Here I am incorporating in the various balances given. They are told cash balance is 10,000, I brought forward. Capital balance is 1,20,000, that also I brought forward. Then assets realized, we have been told 1,50,000 cash to realization account. Similarly, when a liability is paid off, realization to cash or cash by realization, that is 70,000, credit is paid. Now, balance in the cash account is 90,000. That is to be eventually transferred to the capital account. I am transferring it. These are corresponding entries. But however, there is a gap in the capital account in the debit side, 30,000. That represents what? A debit. Realization loss, obviously. So that is the answer. Answer rupees 30,000 D. If you want in detail, we can say like this. Final cash balance transferred and debited to capital account is equal to opening cash plus assets realized minus creditors paid off. That is 10,000 plus 1,50,000 minus 70,000 equivalent to 90,000. The remaining debit of the capital account of rupees 30,000. How? 1,20,000 minus 90,000 represents realization loss. That's all. Answer A is the correct answer. Well, friends, that's all in this episode. I hope this one will help you immensely during your preparation for the exam. I wish you all the very best. Take care of yourself. See you soon.